My name is Juanita Archuleta and I work on the NinjaTrader business development team. We have a very special event for you today with Steve of MTPredictor. I would like to mention it is important to understand that there are substantial risks in trading commodity futures contracts and Forex. You should carefully consider whether such trading is suitable for you and will depend on your specific circumstance and financial resources. It is possible to lose all funds deposited with your broker and could even incur losses beyond these amounts. Please inquire at the following link for a full copy of the CFTC risk disclosure. Also, please remember that these training webinars are not a solicitation nor a recommendation, but simply educational in nature. This presentation is presented by NinjaTrader LLC, which is the technology company responsible for developing and supporting the NinjaTrader trading software. Any brokerage-related questions should be directed to the NinjaTrader brokerage directly. You can use the following email address, or please feel free to directly email them at the following email address. We are very excited for this unique event in which Steve will show us how to use the MTPredictor add-on for NinjaTrader to uncover and access potential trade setups. Thank you again for your attendance, and without further ado, it is my pleasure to welcome to the NinjaTrader webinar room, Steve. Go ahead and take it away, Steve.
Right, thank you very much, Jananta and NinjaTrader. So thank you very much for inviting me in to do today's presentation. It's always good to come and talk to you guys in the NinjaTrader room. So I'd like to say thank you very much for inviting me in. And perhaps if you guys could just do a quick yes in the feedback box if you can see that first slide and whether you can hear me okay as well. Right, so my name's Steve Griffiths. I'm the Managing Director of MTPredictor Limited and developer of the MTPredictor add-ons for NinjaTrader. Today I'll be talking for about 30 minutes. Do feel free to ask questions as you go, but we'll have like a specific question and answer and review session at the end. I'd like to start off by going through some slides just to give you an introduction of MTPredictor and what we do, and then we'll get on to some live charts in a bit. So let's go through these slides. But as usual, we have to start with a risk disclaimer. I know Julianta's done a risk disclaimer as well, but it's important in this business just to remind you that all examples that I'll show you today should be considered hypothetical. No trades are actually taken, so this is just shown for illustration and training purposes only. And this is the big one here. Just remind you there's a risk of loss in trading and investing. Put another way, all professional traders know and understand, but more importantly accept that losses can and will and do unfold. And we'll be looking at some losing trades in the presentation today. And I feel that's always important that you always look at the downside of trading as well as the positive side. It's very important to do that. Right, just a bit of background about me, because obviously if you're listening to me, you'd want to know what my experience is. Basically, I started following the markets back in 1987, so what's that, 31 years ago? So I've seen quite a lot over the last 31 years. It's been around the block quite a few times. MTPredictor itself was launched back in 2001, so if you guys can do your maths, on that you'll see that basically I was trading myself for about the first 14 years, and then I launched MTPredictor back in 2001, which is now 17 years ago. So MTPredictor itself has been going for 17 years, and we did our first NinjaTrader add-ons in 2005 thereabouts. So we're one of the oldest NinjaTrader add-on partners as well. We've been working with NinjaTrader for quite a significant amount of time. We started on NinjaTrader 6.5 way back then, and obviously now we have add-ons for NinjaTrader 7, and I'll be looking at the add-ons for NinjaTrader 8 a bit later when we look onto live charts. Right, a bit more background and sort of to set the scene on MTPredictor and my view on basically markets based again on my 31 years worth of experience. What I found is that basic markets go in cycles. This is not new. Basically back in the early days when I was learning myself, there was lots of books about markets are random. There's lots of books about technical analysis that markets had basically predictable patterns. So basically I used to struggle with the whole idea of how can markets be random and also basically predictable. Myself, I've got a mathematical background. I'm trained as an engineer, and the mathematical side of me basically sort of went to the idea that I like the look of repetitiveness in markets, particularly with patterns. So that's what drew me into Elliott Wave analysis. Now, most of the time, as soon as you mention the words Elliott Wave, everybody goes blank and freezes because over the years, I think it's had a bad press because basically the way it's taught mostly, in that the basics are if you can find out where in the pattern you are, you should then be able to predict where you go. But what I realised is half the time it basically didn't work that way. Half the time, because markets are random, the patterns just basically fell apart. So what I basically did was then I invented my own unique approach to Elliott Wave, which I've called my isolation approach. And it's, well, I think, fairly obvious in that we basically looking to restrict our analysis to the 50% or maybe slightly less of the time when the markets are making clear patterns. So it's the age-old average. It's basically look to trade when the picture's clear. When it's not clear, don't. And from that, basically, we've developed our certain patterns that we look for with our MTPredictor add-ons, and I've basically nicknamed these TS1, 2, 3, 4, basically different setups. And we also have a wave 3 variation for you guys who are Elliott Wave sort of students. It's basically where we look to catch the wave 3, and we'll see an example of that a bit later in the webinar as well. We also have areas of support and resistance, and you'll see how I couch our basic analysis in and around basically looking at the pattern within the larger degree trend, in other words the larger degree charts, and for that we use a proprietary indicator that we've developed, what we call our decision point, and again that will be shown once we get to our live charts. We also have an Elliott Wave module, again using our unique isolation approach to Elliott Wave, so this will be very different to what you'll have seen a lot of, or read if you've done any research on Elliott Wave in the past. And we also have a manual risk reward tool. So basically, if I go through some of these very lightly to start with a few slides before we get onto the charts. The one thing I said at the start is that losses can and will and do unfold. And this is one thing that I think many amateur traders tend to shy away from because everyone wants to have a high percentage of winning trades. And obviously it's natural, human nature, we want to be winners the whole time. However, that's very, very hard to do in reality. So based on some of the work done by Van Tharp many years ago, we have basically as the core of our tools, we have what's called position sizing. And what that does is basically sizes the position, as the name suggests, to basically take account of your entry and your stop and your size of your account and how much do you want to risk. In other words, the number of lots, contracts or shares will always be varied depending on your setup. So in other words, when your losses come through, they're kept small. That's obviously paramount to any kind of trading strategy, and it's something that you should all be aiming for, keep your losses small. But on the flip side of that, also you need a strategy that has tools that when the profits come through, the profits are large, but not just large in dollars, but large in relation to the initial risk. And this is why we have what we call an R unit, where basically our profits are mainly focused on risk units relative to your initial risk or the losses that you take. And this is the most important thing actually to be successful, is keep your losses small but also have your profits large. This was actually a daily chart of Facebook just before Zuckerberg basically got in all the trouble that he did with basically letting all private data be scalped by other apps. And as you can see, we had a nice sell setup just before the market fell into a higher time frame support, where our profit would have been approximately 14 times the initial risk. So that's what we're basically looking for with MTPredictor. We're looking for strategies that Doesn't necessarily predict the future, but keeps the losses small and profits large, and that's why we have position sizing at our core. And from that we can set up different account sizes in our tool, and also different currencies for different account sizes depending on what your trading account is, and also you can vary your percentage risk for your different asset class, again with the view of keeping your initial risks and your losses small when they come through. MTPredictor has automatic trade setups, but we're not a black box system. This is important to understand, is because, as I said at the start, I don't believe that markets are predictable all the time. I believe they're random half the time. So what we're looking to do is only trade when the market position is clear. So we have automatic setups come up, but they're there for basic ease of analysis and to be taken in the backdrop of the larger degree trend, in other words, a clear larger degree picture. We also have our decision point levels. Again, I'm guessing you'll want to see these on live charts a bit later, but these are areas of support or resistance that are on the chart in advance. They're projected out there in advance. They're leading indicators. So basically what we're looking to do is put those out there in advance. Then if the market then goes into those and makes a meaningful support and resistance, or meaningful reversal of that support and resistance, then we can look to work with the pattern and basically say that the market is then in a sort of clear pattern. We also have an Elliott Wave tool where you can find Elliott Wave patterns on the charts. Again, this is used in my unique isolation approach. Here's an example here of a 3-minute chart on the YM for a while ago, where we had a 5-wave sequence going down. Once that's complete, the market tends to go back to the decision point level taken from the prior wave 4, and as you can see, that's what happened very nicely in that example there. I can hear you all saying, well, can we have any tools where we can perhaps anticipate where a current Elliott Wave pattern, if there is a clear pattern on the chart at the moment, is likely to go to? And from that we have our WPT or Wave Price Target tool. So in the previous example, there was our 5-wave sequence going down into there with the low right at our Fibonacci cluster or wave price target at the low, but a little bit higher than that or earlier than that, if you're coming into around your wave 4, you could then use our WPT module to then project in advance where areas were for the next Elliott Wave pattern, in other words, the next swing could potentially go. We have a manual risk reward tool, again because position sizing is at the core of all we do. So if you do your own trading or do your own setups above and beyond our automatic or our automatic setups, then you can basically build trades in around your own manual analysis, again where the position sizing is taken account of automatically for you. Losses. It's important again to always consider losses. In other words, not to hide losses. I must admit, I do get frustrated when either gurus either skip over losses or software don't show losses and basically they get hidden. So we can always see when we have excuse me, losing trades, and you can do analysis on those to see what would have happened at the time. In other words, you don't have to go back, you can actually see what would have happened at the time. So it's important to not to put losses underneath the carpet, so to speak. Natural part of NinjaTrader is the market analyzer, and within that we can add in our automatic setups. So when they come through, you can get highlighted to automatic setups. You can also do the same for our Elliott Wave patterns on the time frames and the markets you wish as well. So you can build your market analyzer to alert you to potential setups as they come through as well. One thing we do have as well, just to make the trading that much easier for you guys who use NinjaTrader brokerage in particular, or any supported broker within NinjaTrader, we have a trade module. And what's the purpose of this? Well, this is our Pro version. We have 2 versions that you'll see in a minute. And it's basically for taking our position sizing information that's on your chart and be able to then build orders around that very quickly and easy. So rather than having to adjust the number of contracts, lots of shares manually, it automatically does that, and then just with a quick click of a button will then place that order for you. Once the order's filled, it will then place a stop target and a profit target for you as well. If your trade setup is invalidated, in other words, you've gone beyond your stop trigger, it will then cancel your entry order for you as well. It also has various tools to do some trade management as you're in the trade as well. So basically it means, or allows you, I should say, to basically manage your, or place and manage your MTPredictor trades, be it automatic ones or built around your manual risk reward tool, very easy and quick indeed. This is probably something that should be, most vendors should probably leave to the end, but I think it's important to basically just let you know what the cost is before we start looking at some live charts, is that we have two versions of MTPredictor. We have our base version, which is 1,995, and we have our Pro version, which includes the trade module for 2,495. Both of these have a 15-day trial for either $95 or $145 for the Pro version. So I just wanted to get that out there a bit early on, rather than just to slip it in right at the end, so you guys know basically what the costs are before we start looking at some charts. Before I get onto the contact details, I'll probably come back to this at the end, but these are our contact details, website, and our main email address. Right now I want to go and start sharing my screen, and while I do that, so can you just all let me know whether you can see my chart there of the ES as I swap over as well. And while I do that, I'll answer Randy's question. Randy, best thing to do is to drop us an email. You can drop me an email, steve@mtpredictor.com, as that question doesn't really relate directly to NinjaTrader. So drop me an email after the webinar and we'll answer that separately. Right, so how did this all work on charts? Basically, if I do a couple of examples on the E-minis, then I want to look at some Forex examples and we'll open it up after that. From what I've said so far, basically my belief is that markets are random half the time and clear half the time. So how do we decide whether the market is being random and we should ignore it, or how do we decide when the market becomes or comes into a clear pattern? What we do is look to the higher time frame chart. Now for this we look to a time frame between 3 and 5 time frames higher. So if you're on a 3-minute chart, you'd go out to the 15-minute chart and you'd place your DPs on the chart. These are our decision point levels. I just want to put a bit of white space on the right hand side here, just so I can slide the chart back a bit. Now I want to use an example first just yesterday on the ES and the NQ, and just show you as we go back to before yesterday even opened. There's yesterday. If I go back before yesterday even opened, can you see how we had some pivot highs here? This is a 15-minute chart. I'm not looking at these setups. I'm just looking at the swing highs or lows. So what we basically do is just right mouse click over a pivot high, then do decision point, and that then gives you an area of potential support, or in this case resistance, out there in advance. What we're looking for there is to see if the market gets up into that level. And you can see here the ES went up into that level there. So in other words, it went into that level and started to back off. If I go down to a 3-minute chart, that level is kept on the chart very nicely for you. And you can see here that this 3-minute chart went into this higher time frame resistance. We have a trend indicator down here that's used for guidance, and you can see this went from blue, which was up, to black, which was in the process of making a reversal and went red later in the day. But the idea being is that when you get a setup coming in at higher time frame support and resistance, you then have a setup that you consider trading. To analyze this, I'm going to right mouse click, place analysis on, and here you see it does the position sizing for you. This is based on 2% on a sample $20,000 account. By the way, you can have different accounts if you want in different currencies. You can see our position sizing is done in the background there, or the tick or pip values change the background to keep your position sizing the same if you have different currencies or different size accounts. But this then allows you to adjust your position sizing and also gives you a target. So if this trade had gone down to this first target, the profit would have been approximately 3.5 times the initial risk. But guess what? It was taken in, it was then stopped out. Again, I don't think that many vendors will start off with a losing trade. This is because it's important to understand that losses will always happen. They're not things to be hidden away. So this would have been a minus 1R loss, or a minus 1R loss, i.e. the loss was kept small. If I go through to, well actually the last thing I want to say on this is, can you see how can this be used for the S&P E-mini? Well, this is what this is. The ES is the S&P E-mini. So this is what we're looking at here. But can you see how we have the concept of the higher time frame with our trades within the higher time frame support and resistance? If I go forward to today, I'll just clear the chart off. Here you can see we had a TS3 sell. If I place the analysis on, it was going down very nicely. It didn't quite reach its target. Why didn't it reach its target? Well, if I go out to the higher time frame chart, I'll do exactly the same as what I did there. In other words, I'll go back in time a bit. That was where that 3-minute sell came in. We had a 15-minute pivot here. I right mouse click. Can you see how that level would have been on the chart in advance? It was there before the market got down there. So if I now go back to the 3-minute chart, can you see what happened? This short trade came right into higher time frame support. It's like basically if you're swimming in a river, suddenly the flow is against you, it reverses against you. No wonder the trade didn't keep on going down to its initial target. So from this, let's just grab the risk reward. Once it gets to that level, you'll probably want to start to trail your stop a bit closer, and that would have been a nice 1.9R profit. So can you see how you can use your trades on your time frame, but in the context of what the larger degree picture is telling you? A great example from the NQ yesterday. In fact, actually, this is a great one on the NQ today. As the E-mini was coming down into its DP support, look what happened on the ES today. Oh, sorry, the NQ today. If I go out to the 15-minute, there was the last pivot low. So again, that level would have been on the chart in advance. It would have been there before the market got there. If I go back down to the 3-minute chart, look what the NQ did. It dropped down into this level onto one of our setups. A VS is a volume spike setup, which is basically a fake out by professionals going in the opposite direction. But can you see this nailed the low perfectly? Right mouse click, do our analysis. This would have had you long as the market was rallying up. It closed before it got to the target, so you'd have come out here for approximately 3.8R, or should we call it 3.5 times the initial risk. But you see, the idea is that we're basically couching this in the direction or using the higher time frame support and resistance areas to give us the larger degree trend. In other words, that's what we're looking for. When the market's not doing anything sensible, we stand aside. I want to have a great look at an example from yesterday. This was an absolute corker. It was this one here. Why was this a good trade setup? Well, here we have the market off the low, came up to the high here. If I right mouse click here, it was actually a nice 5-wave sequence into the high. After this, the market came down. It then made an initial move up into what we call a W3 or wave 3 setup. Why are these good? This is one of my favorite trade setups. Why? Because in Elliott Wave terms, this is the start of the sequence. This is the initial move down. The initial correction in Elliott Wave terms is a wave 2 that should subdivide into a minor ABC. And if I right mouse click here, do the analysis, the target for these, because this is a potential wave 2, is the wave 3. And here you can see the market came straight down into the typical wave 3 WPT. This is the Fibonacci cluster for the typical area of where wave 3 goes. But why was this so good? Well, look at the risk-reward ratio. This is what we're looking at for good trades. Remember the ES example I showed you would have been a -1 hour loss. The loss was there, but it was kept small. This particular trade, the profit was 10 times the initial risk. So it turned an initial risk of just over, well, about $350, ignoring slippers and commission, into just over $3,500. So this is what we're looking to do with MTPredictor. We're not looking to have a high percentage of winners. I don't believe that will actually can happen in the world. I don't think you can have 70, 80, 90% winners. It just isn't achievable over the long run. The best thing to look for is keeping those losses small and having potential profits, that when the trade goes with you, the profits are large, but not just large in dollars, large in relation to the initial risks. Let's have a look at a couple of examples on, I want to look at a currency. Let's do the same idea. You see, we're doing the same thing on any market, any time frame combination. I want to go out to a longer time frame on the a currency, on the US dollar, Japanese yen. Just an example. Just want to show you what's happened very recently. Here was a pivot low. So again, if I go forward, can you see how there was a pivot low? That was the last swing into the high. We then put that decision point out there. So that is out there on the higher time frame, the daily chart. We can see the chart came down here into that DP support very nicely, started to rally up. So if we now go down onto a slightly shorter time frame, say a 4-hourly chart, I'll just load a bit more data. Can you see what happened? The market came down in here. Here's the low coming in beautifully at the higher time frame support. In other words, this is where the picture becomes clear. We're not using this to project, we're just looking to see when the picture becomes clear, and that is when markets make meaningful support and resistance at these higher time levels. Here, the market then rallied up nicely. It rallied up nicely into if I do an Elliott Wave, a Wave 5 high. Do you remember right at the beginning on the PowerPoint slides when I was looking at those? As I said, after a completed 5-wave sequence, the most likely thing to happen is to go to the DP from the prior wave 4. So if I go back to the prior wave 4, do a decision point for that, that would be an area of where you would anticipating potential support even before the market got there. So of course, when the market got down into this level, it gave a buy setup. The market trend was up. Why was it up? Well, because the Japanese yen made a beautiful reversal at the higher time frame DP, and also our MTP trend was blue. We can then look to do a nice trade setup in the direction of the large degree trend. Let's have another look at a slightly shorter time frame chart again on the currency. This was what I was following on the British pound US dollar. Let's just zoom in a bit. Again, if I go back a bit, that was the last low. This was the last swing into the low. You'd have right mouse click, had your decision point. So again, this is the whole idea of what we're trying to do, is you have these levels on the charts, on your chart in advance. Now if the market doesn't reach these levels or goes through them, or these levels basically don't work, that's when you deem that the market's in the 50% of the time where it's random. In other words, you shouldn't be doing anything. So basically you throw that out there. If the market then goes up into that level and then makes a meaningful reversal at that level on the shorter time frame, in this case, let's go down to the hourly now. Do you see what we suddenly had appear here? There's your higher time frame resistance. Can you see that? That was on the 240 minute. This is now a 60-minute chart. Here we had a volume spike setup come in with a red sell bar. Our MTP trend had gone black to say we're in the process of making a reversal. If we right mouse click, do analysis over this red sell bar, the British pound basically throughout today has declined nicely and has now reached that target where the potential profit was approximately 6.5 times initial risk. Again, do you see how the position sizing is taken care of? So even though we're now using a Forex account, we're still risking 2% on a $20,000 account. But the same idea is paramount in that we're throwing out there our resistance levels on the higher time frame chart. We're then looking on the shorter time frame, and that's between 3 and 5 time frames apart, to then look for meaningful reversals, to then gauge your large degree trend, and from that look to take trade setups that fall in that larger degree trend. And that is basically what MTPredictor is all about, is that we're not a black box system. We don't believe in black box trading, 100% mechanical trading, because over the last 30 years, basically my experience has told me that markets are random about half the time. For any of you guys who are trying to develop mechanical systems will probably have found it really difficult, and there'll be times when the market is basically giving you a hard time, and I think the reason for that is because half the time markets are random. So what we're trying to do is basically look to see when the market pattern comes out of the random phase, as we can call it, into a more predictable phase, and we do that by looking to see when markets make meaningful support or meaningful reversals at the higher time frame support and resistance areas. In other words, we're looking for the higher time frame to basically be the governing time frame, to basically see whether the market is behaving itself and making a meaningful reversal at that higher time frame. We then use that to say that the market pattern is then in a clear phase. It's like driving in fog. Suddenly the fog clears and you can see where you're going. You then look to take trades that fall in the direction of that large degree trend, and then use position sizing to keep the initial risks or losses small, and hopefully over time you'll have profits that are large in relation to the initial risks. That is basically MTPredictor in a box. I suppose I could show you very quickly our trade module here, and if I just throw the trade module up, you can see there it is. It basically pre-populates your trade setups. So for example, if you were here and you're looking to do this trade setup, you just click on trade and it will then do the trade for you. That's on a currency. If I go back to our NQ version, here's our NQ version with that 10-hour profit. There you go, it's 5 contracts, so it'll tell you what to do. Makes it very easy for placing the trade. So that's available in our Pro version. Johannes, the hard time frame, yes, is the next meaningful time frame up, and it's normally between 3 and 5 time frames higher. So if you're trading a 3-minute chart, it'd be a 15-minute chart. If you say on Forex and you're trading an hourly chart, you go up to the 4-hour. If you're trading a 4-hour, you go to the daily. If you're, say, trading daily stocks, you'd then use the weekly as your higher time frame. So it's basically the next higher time frame up between 3 and 5 time frames difference. Right, so I've been talking now for probably about half an hour, and so what I'd like to do now is perhaps open up to some more general questions and see where we go from that. So I'm guessing you guys will have questions, so please feel free to ask your questions, and I'll see if I can answer those as we go to get an idea of what we're doing. So please do type in your questions now, and we'll see where we go. But yeah, the 15-minute DPs have been doing a good job on the E-minis yesterday, today, and the last couple of days. You can see it nailed that low very nicely on the NQ. If I go to the ES, it did exactly the same over the last couple of days. You see it caught that high very nicely there. If I go back to that low there and put out the DP from there, Can you see how that caught yesterday's low? So basically, yesterday's high and yesterday's low were basically bound by our DPs. Today the market's been chopping sideways within these. But if I put these DPs on, remember that these DPs are on the chart before the market gets there. So as the ES was rallying up here, this level would have been on the chart in advance. As it was declining down, this level would have been on the chart in advance. So now if we go down to the 3-minute chart, can you see how this TS3 sell was at the higher time frame resistance, came down into our lower time frame support, and that's why that reversal came in. FD, we have basic customers all over the world who trade pretty much every market there is out there, whether it be India, whether it be the Far East, whether it be Europe, whether it be Australia, whether it be America. Like I say, we've been going for 17 years now, so we have customers pretty much all over the world in pretty much every market there is, and even cryptocurrencies as well. We've actually added in a special, if I go to our tools in MTPredictor, in accounts and risk, underneath our Forex position size or our Forex sizing here, you can either do your Forex in different lot sizes, but we've added a custom one in here where you can do a custom lot size for basically doing position sizing for cryptocurrencies as well, if you wish. Joel's asked about what's the probability success rate on this. Well, that's the wrong question. That basically pertains to basically a mechanical black box system. We're not a black box system. Every single MTPredictor trader will trade this differently, depending on their risk profile, basically how experienced they are, and it'll be different from every one of them. It's not a black box system. I don't believe basically that that people should basically trade in exactly the same way, because let's face it, every one of you guys are different. So why should you be forced into doing exactly the same as the person next to you? We have customers doing just our wave 3 trades. We have some customers just doing our VS trades. We have some customers being a lot more aggressive. We have some customers being a lot more reserved. So it really depends on your own personality as a trader. And of course that will grow and change as you become more experienced. FD says, do I trade myself? I wish I had more time. I'll tell you what, if I was in America, I'm actually based in the UK, and the hardest thing for me is following the E-minis when you've got a family. It was a lot easier many years ago when I was single, because in the UK the E-minis are open from 2:30 in the afternoon to 9:15 at night. And I'll tell you, when you've got a family with young kids, it's very difficult to sit in front of a screen throughout those particular hours. Sam's asked about the underlying principles other than Elliott Wave that used to drive these areas. The DPs and the WPTs, these levels you can see on the chart, they're basically Fibonacci clusters and a few other things thrown in. So basically this is based on mathematical relationships between the swings. The Elliott Wave stuff is my unique isolation approach to Elliott Wave. If you want to drop me an email, steve@mtpredictor.com, I can forward you an article I wrote for Traders World magazine a couple of months ago on the isolation approach, so you can have a read of that as well. The VS setup that I was looking at earlier on the NQ is basically volume based. This is a very nice setup that I like myself, because it's based on a fake out on professional money. Basically, if the market makes a wide range bar like it did here, beyond an important psychological level, on high volume you get a VS spike. If it then reverses on the next bar, in other words fails to follow through, it means that the high volume on the previous bar is not selling, as most amateurs would think on a break beyond a prior important psychological high or low. It's actually, in this case, buying by professionals, i.e. it's a fake out. When this happens, you normally get a strong move by the professionals in the opposite direction. So what we do, we built a setup in around this, because as you can see, this fake out tends to happen at our DP level. In other words, it doesn't happen at any old place, it happens at our DP level, and then we've built a trade setup in and around it where, remember, it's not just the losses, keep the losses small, it's also the profit targets. So we've got a setup in and around the movement of professional money based on a fake out by professional traders. So that's a nice one that's not just Elliott Wave based. Right, so any more questions coming in? If I just go back to the slide very quickly, here's our contact details. MTPredictor.com is our website. Do have a browse around that. We do basically a webinar, a training webinar for MTPredictor customers every Tuesday. But if you want to, you can drop in on that. If you're not basically an MTPredictor customer, we don't force it to be customers only, so you can come in and see what we're doing on a weekly basis for as long as you wish. There's no high pressure sales at MTPredictor. Take as long as you like before you just make any decisions. And obviously our email, sales@mtpredictor.com, or my direct email if you wanted to is actually steve@mtpredictor.com. Just to remind you that we have two versions, basically a $2,000 or $2,500 with the trade module for our pro version, and a 15-day trial is available for the prices you've got on there. So everybody, we encourage to have our trial to start with, so you can see whether this suits your trading style and whether it fits your personality before you make a final buying decision. RR has asked about other versions we have. This is actually a NinjaTrader webinar. We do have a standalone version, and I suggest you drop us an email if you want to ask about that, because today we're actually presenting our NinjaTrader 8 add-ons, but we do have a standalone version, so drop us an email and ask us questions on that if you wish. Like I say, MTPredictor has been going since 2001, so we've got 17 years worth of experience on MTPredictor, and I started back in the markets in 1987, so this is based on over 30 years experience on the markets. The prices are basically $1,995, which is what, $2,000, and then basically $2,500. So $2,000 for the add-ons, or if you wanted to include the trade module, it's basically $2,500. So the difference is $500 extra. So that's the price for our add-ons. Right, any more questions coming in? I'll just wait a minute or so more just to see whether there are any questions, and then we'll be looking to wrap the webinar up. We'll just wait probably another minute just to see whether there are any more questions. If there are any questions that you've forgotten to ask and you remember after the webinar, again, you can always drop us an email. All our training, FD has asked about training. We do our free Tuesday webinars every Tuesday for basically 40 minutes. And that's what our training's done. So every week there's basically free training for 40 minutes. If you're a customer, they're all recorded, so you can view those at your leisure. RR, if you're a current customer and you've got our old NinjaTrader 7 add-ons and you want to upgrade to NinjaTrader 8 add-ons, drop us an email and we'll give you on that. Joe has asked us a money-back guarantee. Basically, that's why we have our 15-day trial. So what I suggest you to is, if you're at all worried about this, come into our training. Come into our training for as long as you wish. Sit on the sidelines, read our PDF. On the website, there's an introduction to MTPredictor PDF that you can download that goes through our setups. But take your time, Joe, is what I'm saying. You'll never get any sales pressure from us. Come in, look at our training for as long as you like, ask as many questions, and then when you're ready, then take the trial, and that's a 15-day trial. And if you're not happy, that's absolutely fine. You don't need to purchase it. Again, there's no sales pressure here at all. So do take your time. Yeah, the 15-day trial is a is fully working version. Yeah, we don't hide any modules or anything. But Joe, I suggest take your time before taking the trial. Come into our training webinars first, see what we do, and just take it slow. No pressure at all. Benefit of the trade module, as I said, it will actually allow you to place your trades and manage your trades really quickly. So, for example, on this particular trade here, as soon as it came in, you'd have clicked trade, and then it will allow you to place the order for the 4 contracts at the buy level, and then if that's filled, or once that's filled, the stop order and the target order will be placed, and you can then manage your trade with the various tools as it goes with you as well. Joe, yes, it's our training is basically 10 o'clock New York time on a Tuesday. So if you can't make that, perhaps drop us an email and I'll send you a couple of recorded ones if you wish. That's fine. Michael, yes, you can use whatever markets you wish. You can follow what markets you wish. I say we have customers using all different markets, different time frames. Sam says basically, can you use it for longer term stuff? Yes, you certainly can. You can use do it on daily trades, weekly, whatever you wish. Really, I've only just done some short term charts here just for the purpose of the webinar, but we have lots of customers who just purely and simply just work off daily charts, and then you use the weekly for the higher time frame. In fact, one of the examples I showed right at the start was on Apple, not on Apple, it was on Facebook, sorry, when Zuckerberg started to have all those problems. So it was a daily chart of Facebook with weekly DPs on that for large degree support or resistance. So that was a daily and weekly chart with a longer term chart. The trade module, if you're asking about positions on the trade module, this is really only for day trading. So for this, you can't change the chart and you can't close NinjaTrader. So the trade module is really only handy if you're just using day trade for day trading or intraday trading in and out on the same day. So I wouldn't suggest the trade module if you're looking to hold positions overnight. So if that's the question you're asking. Right, any more questions before we wrap up? Because we're getting late now. Joe, that's fine. Yes, a lot of people follow the E-minis. I would suggest following all 3 E-minis rather than just the S&P, rather than just the ES, because as you saw here, there was a nice setup on the NQ off that low, and we had a nice trade setup on the ES there coming down into that low. So I wouldn't follow just the ES, follow the ES, NQ and YM as well. Used to be the Russell Index in the old days, but that's too expensive now, isn't it? Right, so I think we're now getting to the end of time. So what I'd like to do is again say a very big thank you to NinjaTrader, Junianta. Thank you very much for inviting us in. It's always good to, I really enjoy coming in to do these presentations with NinjaTrader. Again, we've been, we're one of the longest and oldest partners with or add-on partner with NinjaTrader. We started in 2005, so we've been doing this for a good number of years with NinjaTrader. So it's always a pleasure to come and talk to you NinjaTrader users. It's always great. So again, thank you to Juniata, and a big thank you to NinjaTrader for having us in. If there are any other questions, do drop us an email and ask away. It's quite late here in the UK, so it'll probably be tomorrow before any questions are answered. So over to you, to Juniata, for a last roundup. But again, thank you very much to everybody, and I've thoroughly enjoyed coming in and presenting to you guys.
I would like to give a special thank you to Steve of MTPredictor for a great presentation today. Everyone in attendance here will receive an on-demand recording of today's event. Please keep an eye out for that email. NinjaTrader ecosystem is pleased to sponsor these weekly vendor events as a value-added service for our clients. If you find value in these events, we hope that you do attend them on a regular basis. We would like to remind you the information provided in this was that of MTPredictor and not of NinjaTraders. All information was for educational purposes and should not be construed as trading advice. Again, we do appreciate the time that you do spend with us. Enjoy the rest of your day, and we hope to see everyone in future webinars. Happy trading from all of us here on the NinjaTrader ecosystem team. Thank you again, Steve. Have a wonderful afternoon, and we will see you again soon. Have a great one.